Most people lose money in crypto because they guess. If you're tired of guessing, hit subscribe. This is episode 1 of a 7-part series called Project Overdrive. No hype, no hopium, just a real system with real trades and real results. I work a full-time job. I don't have time to gamble. I don't guess. I built a trading system with 3 simple rules and I'm testing it publicly so you can see if it actually works. It's called Project Overdrive. I'm trading real money. I'm not using Discord signals, no sketchy influencers, just disciplined fundamentals first trading. Here's how it works. Before I even think about hitting buy, 3 things have to line up. 1, the coin's been beaten down. The relative strength indicator, or RSI, is under 30. That's tech speak for people are panic selling. 2, it's still in a long-term uptrend. If it's already dying, I'm not throwing a rope to save it. 3, volume's rising. Somebody, not just me, has to actually care. Most people are in the market 24/7. I'm not. Project Overdrive only activates when it's time to go. No grinding, no guessing, just clean entries, like flipping a switch when the engine hits the right RPM. I know the Wall Street finance bros are out here running machine learning models, options volatility hedging strategies, and neural networks trained on 12 years of macroeconomic sentiment data scraped from Janet Yellen's facial expressions. That's not me. I'm not a quant. I'm not a hedge fund manager. But I do understand how to use math. I can write a little code. And more importantly, I can follow rules. Project Overdrive is my way of turning that into a strategy anyone can run. Whether you're a part-time trader, a developer, or regular person just tired of guessing your way through crypto, my goal isn't to get rich off one trade. It's to take clean, high-probability setups that make at least 10%, and stack those over time. That's it. Small wins repeated with discipline beat emotional gambling every time. Now, 10% might not sound like a lot in crypto, but I'm not looking for 100x moonshots. I'm looking for 10% in a week or less. If I can find trades like that once or twice a month, not every day, that adds up fast. Let's do some napkin math. Say I make just 2 trades a month and only half of them work. One trade hits plus 10%, the other loses minus 7%. That's a net gain of about 3% per cycle. Do that 12 times a year, that's about a 43% annual return, and that's with average execution. If I can do better than that, great. If not, I still beat most traders who go all in, then all out, then all broke. And no, I won't hit 10% on every trade. Some will stop out early, some will fizzle. But Overdrive isn't about chasing wins. It's about sticking to the system long enough for the math to work. When I say enter a trade, I mean I'm putting real money into a cryptocurrency, expecting it to go up in value. That's called taking a long position. I'm not shorting. That means I'm not betting against coins. I'm not trying to profit when something goes down. Shorting can work, but it's risky, complicated, and honestly, I'm not trying to lose all my money just because Elon Musk tweets something ridiculous. I'm also not using leverage. That's when you borrow money to make a bigger bet, like using an account with $1,000 in it to make a $5,000 investment. Sounds cool until it goes the wrong way. Then you lose 5 times faster. With Project Overdrive, I'm just using my own money, one trade at a time, no borrowed cash, no trying to flip the market upside down, just real trades with real risk and actual rules. So the question is, when do you buy? For me, it has to be under very specific conditions. 3 rules, no exceptions. Rule 1, use the relative strength index, or RSI, as an indicator of how overbought or oversold a coin is. RSI is a number from 0 to 100. When it drops below 30, it means people are panic selling. Fast. That doesn't always mean it's a good time to buy, but it does mean the selling pressure is extreme. I only consider trades when RSI is under 30 because I want to enter when fear is peaking, not when everyone's already celebrating. In 1978, Jay Wilder developed the Relative Strength Index because he wanted a better way to measure the momentum of price movements, and more importantly, to spot when that momentum was likely to reverse. If RSI drops below 30, that's a sign the asset is oversold. People are bailing fast. Sometimes it's justified. Sometimes it's just irrational panic. I'm looking for those panic dips because they can lead to bounce backs. But I don't just buy a dip and hope. I also use Rule 2. The coin price 200-day moving average. Charles Dow, yes, the guy of the Dow Jones, is often credited as the father of technical analysis. In the late 1800s, he talked about tracking market trends using averages, the foundation of moving averages. The moving average rule filters out dying coins. The 200-day moving average tells me the long-term trend. If price is below it, the coin is likely in a downtrend, and I'm not here to catch falling knives. That's investing talk for trying to buy crypto while it's rapidly dropping in price, hoping to grab it at a bargain, but often getting sliced as it falls even further. I don't need to be a hero. Only trades in crypto that are already trending up make the cut. It's like only walking into a party that people are still showing up to, not one where everyone's already leaving with empty pizza boxes. Finally, I use Rule 3, which is the volume of the 20-day average volume. Volume tells me people actually care. What is volume? Volume is the amount of money actually moving in and out of the coin. It shows whether people care or if you're the only one showing up to the party. If the volume is low, the price might be moving, but there's no conviction. It's just noise. I only enter when volume is above the 20-day average because I want to see activity, real momentum, not just a dying altcoin twitching in the dark. If there's no volume, the trade is a trap. I want to see activity, ideally a spike, to confirm momentum. This prevents me from buying into coins that are technically oversold, but also totally dead. Put all three together, RSI, 30, price above the 200-day, and volume rising, and that's when I shift into overdrive. So when do I sell? Simple. I sell in one of three situations. First, if I hit my target, that's plus 10%, I'm out. No greed, just lock it in and move on. Second, if the trade drops 7%, I cut it. No hoping, no doubling down, just out. Third, if momentum fades, meaning RSI climbs past 60, I bail early even if I haven't hit 10%. That tells me the move's cooling off, and I'd rather walk away with something than watch it reverse. This isn't a guessing game, it's a system. I'd rather take 10 clean singles than swing for a home run and strike out broke. If you've ever felt like you're late to every pump and early to every dump, this is your chance to flip the script. I'm putting this system to the test in public with real trades, real timing, and no BS. You'll see every move, win, lose, or flatline. So if you're even thinking about trading smarter, not louder, see you in episode number 2.